Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP, and more so the overall global financial system and why everyone, and I mean everyone, should focus up right now and pay attention. Because what we started to see this entire year is leading up to one massive event. And what is that? It's the breakdown of the petrodollar system. Now, I believe that this has been happening for a very long time. It started to crumble, and now we're really starting to see everything be pushed into reality around the final breakdown of this system. Now, this article was posted back in March of 2007. That's right, I said 2007. What's interesting about this is that we already seen the warning signs way before crypto was even a thing. And now, more than ever, we are finally seeing the petrodollar system starting to weaken. And it all starts with Saudi Arabia. Saudi Arabia is the last, and I mean the last major player to pull out of the US dollar that would push this entire system into a catastrophic downturn. And we do see this petrodollar system has created an artificial demand for the dollar as global oil demand has increased. Recently, we just started to see Saudi Arabia meet with China to do, and I truly do, I believe that they have been discussing possible trading in yuan around oil. If that becomes a reality, the petrodollar system as we know it will cease to exist. And this is a big problem because this is what creates that artificial demand for the dollar itself. So once we start to see this, guess what? The dollar is going to collapse. And we even do see down here, all this is assuming the demand for the U.S. currency and the U.S. debt securities remain strong. But if the petrodollar system ever crumbled, America would be stuck with lots of extra dollars that would no longer be in demand. Those dollars would quickly return to the U.S., which would lead to massive inflation. Pay attention. So as we focus on this, and as we really kind of started to see the events unfolding going all the way back to March of this year as well, it's all leading up to the finale show around this, and that is the breakdown of the petrodollar system. What this will lead to is not only massive inflation, but we will also see a dollar weaker than we've ever seen it in history. And we are focused on the big player, which is Saudi Arabia. Now, also, we started to see China make a lot of big moves. And here we have from Gold Telegraph, breaking news. China Z tells Gulf nations to use Shanghai Exchange for yuan energy deals. There it is. China and states of the Gulf Cooperation Council, GCC, are natural partners for cooperation. This is huge. This is centered around petroleum within Shanghai. And I want you all to understand that these are the moves that everyone should be focused on. I told you guys going all the way back to even March to focus on what the BRICS do next. And this was after the U.S. shot its final bullet, and that was, guess what? Sanctions against Russia with SWIFT and the U.S. dollar. The biggest financial weapons that the U.S. could use. And guess what ended up happening? We are starting to see the U.S. dollar as a reserve currency overseas fail. And this is starting to unfold at a rapid pace, and we've been reporting on it for a while now. Now, what I do believe is going to happen next is I believe we will start to see CBDCs being mentioned. I think that they will start to push towards this. And we do see China reveals digital yuan with expiry date where people are forced to spend and not allowed to save. CBDCs are slavery. Bitcoin is freedom. Of course, this is from a Bitcoin MEXC account, Bitcoin Magazine. But I do believe that these CBDCs are not good at all. I think that we should try to resist them as much as possible. But this is what they are trying to push for. They want CBDCs. They want control of their own currency because also, you know, them having a CBDC gives them full control. They are no longer tied to a reserve currency like the US dollar, where, any sort of major event or move that the US makes also impacts their currency, which has been a big leading issue in a lot of third world countries right now as their currencies are starting to fail. Now, also, over here, we do see BIS wasn't warning about the $80 trillion of off-book debt to prevent a crisis. They were setting the narrative. Shout out to Finance Lot over on Twitter. And here we have central banks are about to blame their policy error on an inability to properly monitor the economy under the current system, citing a need for a CBDC where money flows can be analyzed. The inflation crash and subsequent frozen banking system will be tied to the antiquated network. And this got posted back on June of this year. And listen closely to this.
I think you're talking much more about programmability of retail CBDCs, which restricts the use to specific contexts.
Yes.
Okay, so let me address that. So I think it's worth actually just thinking about how how programmability could have been used during the pandemic. So one of the things that we certainly found was that when the fiscal disbursements needed to happen in the early stages, so there was some economies went into shutdown, the economy was grinding to a halt. You needed to get the resources to people right away. The big dividing line wasn't between those economies with CBDCs and those without, and indeed not many economies actually have CBDCs right now even. The difference really was how efficient was your banking system, and how inclusive was your banking system in that most of the citizens, most of the residents actually had a bank account.
And again, everything that we are seeing around central banks are starting to pinpoint the blame on the system, right? Our current system is extremely inefficient. It's outdated. It's this. And don't get me wrong, I believe that that is the case. I think that our current system is extremely outdated. I think that there's a lot of issues with it. But what they are trying to push here is a Bretton Woods 3, which we will talk about here in a second. We do see over here from, hey, it's Kai. I hope that I'm saying that name right, over on Twitter. We do see BlackRock Global Outlook. Remember what BlackRock recently just said, that they expect a recession like no other. And we do see here, right, the great moderation, the 4-decade period of largely stable activity and inflation is behind us. The new regime of greater macro and market volatility is playing out. A recession is foretold. Central banks are on course to over-tighten policy as they seek to tame inflation. This keeps us tactically underweight developed market DM equities. We expect to turn more positive on risk assets at some point in 2023. But we are not there yet. And when we get there, we don't see the sustained bull markets of the past. That's why a new investment playbook is needed. So not only is BlackRock preparing for huge events in 2023, most likely, listen, I'm not going to say that ISO 20022 is going to be a huge deal and assets are going to skyrocket in price. No, I do think that 2023 is going to be huge for risk on assets like crypto. But I also believe that we are getting prepped for the new financial system to be rolled out. And this is going to be centered on digital currencies, on digital assets, DLTs, and yes, I do think that ISO 20022 does play a vital role in it. I think that this is a huge, huge upgrade to the messaging standard that will allow for interoperability and ease of payment means. It's also going to make it a lot more transparent and a more open system that's less fragmented. So I think that this is vital for the adoption of digital assets, and I've always said that. I don't think that it's going to be huge for price action. Might have some speculative price action happen with it, but nonetheless, I don't believe that ISO 20022 is extremely bullish for crypto. I think that it is moderately great to see digital assets play a vital role in ISO as well, which will most likely happen because this is going to open the system for a lot more opportunity in adopting these types of technology. But all of this is centered on Bretton Woods. So there was a very, very interesting article that got posted on Pacemaker Global, and it got posted on the 9th, and it was Bretton Woods 2 ended today. Now, Bretton Woods 2, the biggest problem around it was the dollar for oil monopoly, which was a big problem for stability of the dollar and all that kind of stuff. Well, that ended, right? That ended with the China announcement, which I just recently went over. And this is going to cause a huge disaster within our dollar market. The biggest thing, though, is Saudi Arabia. So we do see here OPEC's outright refusal to defer oil production cuts until after the American midterm elections in October was a further sign Saudi and OPEC no longer take orders from Washington. Saudi took the unusual step of officially rejecting the U.S. request in public. Very interesting here. Very, very interesting because, as I said, Saudi Arabia, they are the ones that are in control. They decide if the petrodollar deal stays or completely gets decimated. And this is going to be very interesting. But like I said, this will lead to the birth of Bretton Woods 3. This was posted from the IEO on the IMF Org's website. And this got posted back in April of this year. The birth of Bretton Woods 3, a commodity currency revolution. A mere 5 decades ago, the dollar took over the role for itself as the global reserve asset from gold. Since then, the global economy has become increasingly financialized with the advent of first regulated derivatives, then hedge funds and dot-coms, followed by an explosion in over-the-counter unregulated derivatives and securitizations ending in Lehman's failure. All that seems to be coming to an end with a new commoditization hastened by the commodity crisis from current geopolitical events, what renowned flows analyst Zoltan Pazar, I hope that I'm saying that last name right, at Credit Suisse calls Bretton Woods 3. Now, this is going to be centered on a commodity-based currency or currencies. And it's around this new world monetary order, this new world order, which is going to be taking place. And it's going to be centered on central banks. This is also why we are seeing central banks engaged heavily in gold. We have started to see them not only accumulate and hoard massive amounts of gold, but guess what they're also trying to push? CBDCs. Why are they doing this? I could tell you exactly why they're pushing for CBDCs. Because these CBDCs will be issued out on distributed ledger technologies backed by gold. This event is happening, and it's all leading back to years and years ago. Individuals saw this happening years ago because this is a system that is built on instability. This system is not going to work forever. The US dollar, as we know it, is not going to last. I've said this time and time again. We need to all wake up. We need to realize that the financial system of yesterday is no longer going to be the financial system of tomorrow. It's happening. And I want you all to realize this. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe to notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day, beautiful night. Wherever you guys are on this before, this has been Nick. Peace out, guys.